on this episode, I answer the question, should you pay off your mortgage early?
Let's go.
Welcome everyone to this episode of the AskJasonGelios Show. I'm your host, Jason Gelios, Michigan Realtor. I appreciate you guys tuning in here. If you are watching this on social media or on my website, it's allabouttherealestate.com. Please like, follow, share, subscribe. Do whatever you gotta do to make sure that you don't miss out on these videos. So, because this is a weekly show for those of you just joining us for the first time. And for those of you who have commented and shared me questions, I really appreciate that. So that allows me to take your questions and put them into this format. So with that said, sometimes people ask me, should I pay off my mortgage early? And this is really, I kind of feel like it's a subjective question, but there are more benefits to paying it off early than not paying it off early. And so I just want to share with you my point of view on it. Now, here's my disclaimer is that I'm not a financial planner, I'm not a financial advisor. I couldn't tell you the nuts and bolts of a mutual fund, although I have them. But in terms of how I feel about it being in the real estate field, I would say that my best bet here is to share with you my opinion on it, and a little bit of it is backed by research that I've done on it. So with that said, going into purchasing a house, right? From the get-go, you don't want to get in over your head. You don't want to exceed your budget, and you don't want to purchase a home that makes it hard for you to pay down other stuff. So now, some of the benefits of paying down your mortgage or paying off your mortgage early is that you can apply that money towards other things, right? So if you don't have a mortgage payment, you have a house that's paid off, you can put that money towards other things. You can put that money towards, let's say, credit card debt or retirement, right? Max out your retirement accounts like 401k, things like that. You can also put that towards your kids' college and whatnot. But I say that with a little bit of hesitancy because my thought is, and I was on the mortgage side for about a decade, and I wrote a good amount of mortgages for major banks. And my opinion is pay off credit cards first, right? Pay off high interest debt. If you have a credit card that is 30% and you have a mortgage that's 4% or even 6%, even 10%, let's say it's high, then it doesn't make sense to pay down your mortgage early when you have credit card debt. My personal thought, and it's just a opinion, is you should pay off your mortgage when you have other debt taken care of. So get rid of your credit card debt, your car payment, even your car payment that, you know what, that's a low rate, but get rid of it because cars are not worth it. Cars depreciate like crazy. So pay off other debt and then focus on your mortgage. That's what I would do. I want to talk a little bit about how the 30-year mortgage came about. This was actually a pretty interesting statistic, or fact actually, is that during the Great Depression, the 30-year fixed mortgage came about, and that was to help people monthly, right? Help them get into a better home at a lower monthly cost. So fast forward to now, 2019, where you have people that get a 30-year fix. It's pretty much standard. And I remember when I was in mortgages, I think it was before the recession, where they were even offering 40-year fixed rate mortgages. Now, I never offered that. I never believed in it, but they had a 40-year fixed for a while. I don't know if it's still around, probably not, but a 40-year fixed is pretty much financial suicide because of the interest alone. But the 30-year fix came about during the Great Depression, and it helped a lot of people, but now people are just doing that as a norm. And there's nothing wrong with the 30-year fix, but again, it goes back to what a lot of financial experts will tell you, right? Like Dave Ramsey and all them. They'll tell you that, take care of your high interest debt first, and then focus on your mortgage. And that makes a lot of sense to me. So what I would do personally is, take care of high interest debt and then apply more, however much you can, towards your mortgage and pay that down, because that's going to benefit you, right? In the overall grand scheme of things, you want to have assets and you want to have things, you want to have reduced spend, and you want to have things that bring you money. I'm a huge fan of rental properties, right? You can get investment properties and build up wealth that way. But you should be personally financially sound before you get into that, because there are some things that you have to have up front for that. So, and that's a whole nother video I'm going to be doing here soon. But basically, paying off a mortgage is not a bad thing, right? Paying it off early, I should say, because it could put you in a much better position, have more cash flow. Cash flow each month, I think, is king, right? The less you pay per month, the better. But I wouldn't pay off a mortgage early that has a pretty good rate on it when you have credit card debt, right? Tackle the credit card debt, get rid of that, and then focus on paying off your mortgage early. Want to share a side note here too, is you could do a home equity line at a pretty low interest rate off of your house to take care of credit card debt, and you're still paying less a month, right? Then you can focus on paying off the mortgage. Some people do that, they do consolidation loans. Although I would not max out on what's called LTV, loan to value. So in other words, if you have a home that's worth, let's say, $100,000 and you only owe $50,000 on it, don't take out another $50,000 mortgage, right? Don't do that. Just do a little bit and pay off your debt, your high interest credit card debt, and then go back to paying off the mortgage. So that's a great way to kind of get you out of that. I'm a firm believer that you should not max out on your mortgage. It just doesn't make sense to do that. So the grand scheme of things, the big answer is, should I pay off my mortgage early? Yes, if you have other high interest debt paid off, including car. Let's throw the car in there because it's a depreciating asset, and most of the time people get like a 5 to 7 year loan on a car. Doesn't make any sense because of depreciation. So pay off that stuff first and then pay off your mortgage early. So that concludes this episode of the Ask Jason Gelios Show. Definitely follow me on social media. Hook up with me YouTube. All right, subscribe and be sure to hit the bell so that you get notified when I upload new videos. But again, for those of you brand new to this show, I upload a brand new show every week. I take questions that people ask me, as well as some advice I share with some professionals like home inspectors and things like that. So be sure to subscribe, follow, like, comment, go to my website, it's allabouttherealestate.com. And if you haven't, pick up my latest book, Think Like a Realtor, a little guide about buying and selling residential real estate through the eyes of a realtor. It's half real world situations and half tips and advice about buying and selling residential real estate. So that's on Amazon and on BarnesandNobles.com and various other websites. So I'm Jason Gelios, Michigan Realtor, and make it a great week.